Your fifth out of the 10 is about China.
Yeah.
And that's a favorite topic with me and mostly with you. That you're saying China's economy will remain fragile and is hidden by two masks. First one, technology. Outside tech, China's earnings growth has been negative. So overall the growth has been terrific, but tech stocks are 13% up. All firms are 4%, but non-technology -4%. What a difference. That means there is a bit of trouble in the economy.
Yeah, so my view last year, as you know, with the China is investable again because people have become too pessimistic on China.
Right.
But fundamental problems in China still remain, which is that the domestic economy in China is not doing well. The property market, which was such a big driver of growth in China, has gone bust. So property prices in China are collapsing, in fact, and that pace accelerated in the last few months.
And very difficult to rectify that.
Yeah, because there's so much debt behind it. How to
yes.
clean up the whole debt mess in China.
Yes.
And the other fundamental problem China has is that its population is shrinking. Right? So with a shrinking population, very difficult for countries to grow. We have seen that.
You've said that before also, that this shrinking population worldwide is causing a major problem. Demographic.
Yeah. Demographics is such a big drag for growth as far as China is concerned.
So
debt and demographics they have are, have been pulling the domestic economy down. Now last year what happened was that because people re-evaluated their China mainly through the prism of AI. That they said on technology and AI China is doing well.
Missed the two hidden masks.
Yeah, the fact is that that's masking. The fact that the China's prowess in AI is masking the fact that the domestic economy in general, the old school economy, is in trouble.
Wow.
And so I think that will become more apparent in 2026. Is my sort of call that the AI stuff will continue as long as the AI hype remains around the world. But the rest of the Chinese economy, I think that will continue to teeter, and that will become more apparent in 2026.
In fact, China's economy remains fragile, hidden by the two masks. The second mask is exports. They're boosting the Chinese economy. It's not internal. It's exporting. It's gone up from, it went up 16%, now up 29% export increase.
Yeah.
That's net exports minus imports. That's huge.
Yeah, that's the contribution to growth, which is that, that they're contributing nearly a third of all economic growth. So which is that China is just exporting like crazy. Because its domestic economy is weak, its import growth isn't doing that well. So it's exporting like crazy. And that's holding up economic growth in China because, as I said, the domestic economy outside of AI is quite weak. So I'd say, but the export machine is what's really sort of driving the Chinese economy. And as we'll come to our next point, that's causing a major global problem.
Very interesting because of dumping. China's dumping will trigger a backlash. You said Chinese export prices are much lower and China's export volume much higher. So China's prices are down 20%, export prices, and their volume growth is up 45% because they're literally just cutting their prices, dumping.
Yeah, so China's always been known for being an export prowess. We know that. But last decade, if you look at it, China, their export volume was growing at about 17% a year or so. And the prices were also going up. They were raising prices, as is the norm over time, that you raise the prices of the goods you export and stuff. What's happened in the last few years is that China, their export volume growth has nearly doubled,
Fantastic.
And it's now close to 40%.
Yeah.
And they've done that by dramatically cutting prices. So prices are down 20% a year now, and your export volume has surged. This is causing major problems for the world because everywhere you go, and we travel, like in places like Indonesia or even Mexico, other places, they're being flooded with cheap Chinese goods. And at one level, it's good for the consumer.
Good for the people, but for the economy.
But for the economy, and particularly the manufacturing sector, which tends to be the lifeblood of many of these economies, it's really hurting them.
Of course, because they can't sell at that price. So in fact, it'll trigger a backlash. And you said dumping is hollowing out manufacturing worldwide. If you look at the drop in manufacturing in many countries from 2018 to 2024 as a share of GDP, in developed countries is down 1%, ASEAN down 1.4%, India down 2.3%, the manufacturing down.
Yeah.
And Eastern Europe down 2.8. This is, instead of manufacturing growing, dumping is causing it to contract, go down.
Yeah, so that's been like a key trend, which is one of deindustrialization. Now, what's happened is that this hasn't been spoken about that much, although noises are being made about it increasingly. Even the French President Macron spoke about this. But this hasn't been focused on that much because the world has been so busy fighting the trade war that America started, or the trade battle. But the real thing, which may be even bigger than what's the shock coming out of America from the trade war, is this shock which is happening, the China shock.
Yeah.
Which is going on.
That's true, actually.
And I think that now that the Trump seems to have, gone off the tariff crusade, realizing that price increases are happening, it's exacerbating the affordability
and
crisis.
Making other countries work with each other.
Yeah, so I think that he's sort of backing off the trade front, it seems to me a bit. I mean, he's done what he had to do at least.
Right.
But I think that the focus now will turn to this, because as that battle is sorted, people get to fighting what the possibly even bigger battle is, that this massive price cuts that China is doing to export its huge surplus.
But how is China affording this, dropping prices by so much? How it just has to do it because of its internal demand is down.
It's so weak, and it's just overproducing. So I think that people go on about this, and it's one of my topics which really irritates me, that people go on how China needs to increase consumption as a share of GDP is so low. The real problem in China is that it's producing too much. That is the fundamental problem.
Amazing.
It's over-investing and overproducing. And that's why consumption as a share of GDP appears low, because the other things are growing so much more quickly. And that, I think, is the real problem here.
Do you think tariffs against Chinese goods may go up around the world?
Well, I think that a lot more action is going to be taken, and countries are beginning to do that.
To save their manufacturing sector.
To save the manufacturing sector, because we know that. I think that in 2026, that trend accelerates.